Yes. What's going on? I hope everyone is doing great. So, what are we gonna be talking about in this video? In this video, I'm gonna be talking about the strategy that I'm using, starting to use actually, to trade the Nasdaq, specifically on Top Step, as you see here, to trade futures. Now, to give you a bit of background about myself, since this is actually the first video that I'll be posting. I started on this day trading journey actually. I've been trading for many years, but mostly that has primarily consisted of swing trading stocks across the higher time frames. So we're talking like the 4 hour, the daily, and the weekly time frames. But then about a year ago, specifically like April of last year, so it's 13 months, I started looking into day trading, and specifically day trading the Nasdaq. I got to know about prop firms. I had no idea what prop firms were before. I got to know about them. I started to learn on YouTube, specifically watching ICT videos. I started to learn the concepts, but what I found as the months started to go by and I actually started to trade was how hard all of this stuff is, because you learn a lot of these ICT concepts and you have to like gain such a good understanding at a combined level across all of the concepts that it's not actually that easy to apply and actually become profitable with. Now, throughout those months that I've been doing ICT, I've also joined some discords and I've learned a lot from those discords themselves. Although I could see also people making some good money from those discords, but the majority of people were still failing. And in my opinion, the primary reason for that is because there's a lot of most of the successful traders that I was seeing, they were mainly trading based on discretionary signals. Now, what does that mean? It means you are able to read price in real time and you kind of know where the market is going to go and you enter the trade accordingly, and then that move happens. Now, that is not easy to do for most people. Most people relying on a completely discretionary model, they're not gonna find success. Frankly, even I didn't find success that way. Now, if you go to the other side of the extreme, is the mechanical approach. So the mechanical approach is simply like following a set of rules. You enter here, you exit here, and you basically trade like that, trade completely like a robot. Now, with all of the stuff I learned from the YouTube videos, from the ICT stuff, from the discords that I've been in, I've created a new system that is a combination of both a discretionary approach and a mechanical approach to trading Nasdaq. Now, with this video today, I'm gonna go a bit over the strategy itself. I won't go into extreme detail on this first video, and I will also be recapping a bit how my first week went actually trading the strategy. Now, I'm gonna be clear with you, as you can already see here. In order to make it easier for myself, since this is just the beginning, I always like to think long term. I don't want to go all in and like start blowing accounts or something like that. I want to take my time, I want to dial in the strategy, and I want to use these videos I'm doing with you to share my journey with trading this strategy. So I started on Combine. I did this both to reduce kind of the pressure that I'm feeling. I have an Express account as well, as you can see here. But I wanted to start doing this on Combine just to make it easier on myself and also to start building like the discipline and, identify any improvements I can make with the strategy and so on. So I've traded it for 4 days so far. Last Monday, it was a bank holiday in the US, so the market was closed. And I traded it for the 4 days. As you can see here, all of them were green. And the first week here, I pretty much made, again, this is on Combine, but nonetheless, it was still a good week, and it was a 1K week. You can see also the number of trades that I made for each day. And basically gonna be explaining a bit what the strategy looks like. So, so it's mostly, there's multiple components to it. So in order to keep it simple, I first start on the higher time frames, going into the narrative to try and figure out where the market is likely to draw to for the day. Is it likely to go trend up higher or trend down lower? Now, this is not a bias. Like, if I say before the market open, okay, based on my analysis, my expectation is for the market to be bullish and hence to go up. Now, that doesn't mean I necessarily have to marry that narrative. So if at market open I start to see the market go down, I may flip my narrative and say, okay, the market wants to go down today. But basically, I start to go over the daily, the weekly, and I kind of try to to start getting an idea of like where the market is likely to be heading to. I actually shouldn't have done that because it might take some time to load, so I'll put that back on Tuesday. Yeah, but anyway, I will do probably a separate video on that where I'll go into a bit more detail into what goes into this narrative concept. But basically, just to focus a bit more on the strategy here, we can see multiple components, multiple indicators on the chart here. I'll go through them one by one. So we have these lines here that are like curvy lines. There's like 7 of them. Now, I don't always use this one, but what these are here is fair value bands. So you have the middle one, which is called the middle line right here, which is called the basis, and it represents pretty much fair value. Now, as you can see, the price, when it goes down, eventually it comes back up to hit the middle basis line. So it goes back to fair value. You can think of this like, imagine you're outside walking with your dog and you're holding your dog on a leash, right? Now, sometimes the dog is going to go away from you to the right hand side. But since you're holding the dog with the leash, eventually it's going to mean revert and come back to you, right? Or to the other side, if it's going on the left hand side, eventually it's going to come back to you because kind of you're holding it with this leash. The price does the same thing. So when it goes down or when it goes up, and it deviates from that fair value, which is represented by the middle basis line, it's eventually going to go back to that basis line. Now, how is this helpful to us? It's helpful to us because if the price ever gets extended, and the other lines are basically these are bands that are like further away from the basis. So we have, this would be the -1, the -2, and the -3. When the price gets overextended and far away from the basis, we would generally expect the price to go back and mean revert towards the fair value price. So that gives us that's kind of one of the tools we can use to our advantage. The next one would be these orange and blue flips right here, and these specifically are the trend flips. Orange basically means bearish, while blue means bullish. And the general idea here is a trend following approach. So when the trend is orange, the trend is bearish, and basically unless there is a flip from orange to blue, we can pretty much for the most part just be holding on to a short trade. Now, when the trend flips to blue, that means we have flipped from bearish, price going down, to bullish, price going up. And as long as price is going up and the trend is still blue, which means we are still bullish, we can hold on to the trade, right? So let's say we entered here when the flip to blue happened. We entered long, right? And we would get out when the trend then flips orange, and that would give us over 100 points in profit with a long position. So this shows you what the trend is pretty much. Now here at the bottom, we have 3 indicators. The first one is the mean reversion indicator, and it's basically an oscillator indicator that pretty much deviates in terms of standard deviation. So we can see here, we have the 1 and the 2 positive and then the negative standard deviations. We can see here standard deviation with a red dot here, which means that the price has gone up too much. It's overbought. And we can see here, right as we get that red dot, the price is overextended, it's overbought, and we get a pullback at that point. We can see the same idea here. We have a green dot here. Price is around minus 2.5 standard deviations away from the mean. And then we, of course, given the oversold conditions here, then we get the reversion to the upside. Now, this doesn't always work like as perfectly as this. So for example, if you get the green dot here, it doesn't always mean it's gonna play out brilliantly like this. That's why we're using a combination of these indicators, and we're not just relying on just one of them. And this is also where your discretion comes in. So what I'm showing you here, this is mechanical stuff, but you still need the discretionary angle to help you with your trading. But nonetheless, if you just do the discretionary side, it's gonna be very difficult, and that is why I could find that I was struggling when I was in the Discords, when I was on YouTube, and not just myself, because you kind of need that mechanical assistance to help you in real life trading, given the prices are moving so fast and so on. The next one is the BX trender, and this is another useful indicator to use. One thing I forgot to mention is I'm typically trading on the 30-second time frame, so that's something good to point out. Now, focusing on this indicator here, basically what this is telling us is the buying and the selling pressure. Now, of course, if we're looking to go long and we want the price to go up, what we need is actual buying pressure to be coming into the market. So what we see here with the dark red histogram bars being printed is selling pressure, and you can see as the selling pressure is building, the price is going down here. Now here though, we make a higher low, and we can see the price start to recover until the BX turns green, which means now after the selling pressure has been exhausted, buying pressure is actually starting to re-enter the market. And we can see as the buying pressure and the green histogram bars are printing on the BX trender, the price of the Nasdaq is moving higher. Now then we get to a point where the buying pressure starts to ease, and we can see here we start to make lower highs, and then we start to make lower lows with the dark red bars as the price starts to retrace right here. So this gives you a good idea, and this is useful because it shows you the buying pressure. Because again, if you want the Nasdaq to move either higher or lower, that needs to be driven by either pressure on the buy side or the sell side. And this indicator here shows you where the buy or sell pressure basically is. Now, the final indicator is the MACD. This one, basically, you can see, I can show you like visually, the simplest way to explain it. We can see as the price is coming down, it's trending lower right here, right? And then we start to get the histogram recovering here. We also get this flip right here on the MACD indicator. And we can see that when we get that flip, right, that bullish crossover on the MACD, that is also where we get then that bullish move. Eventually you start to get selling pressure, the MACD histogram starts to turn as well, we get the crossover on the opposite side, and when we do get that crossover, we have then the pullback in the price right here. So these are all useful indicators that you would ideally want to use in tandem. So again, for example, like if we look at this long, what do we have here? We have the price that is far from the basis fair value band. We have the green mean reversion dots signifying buy signals right here. BX trender starts to recover, MACD histogram starts to recover as well, and we then get the flip. Right here with the crossover on the MACD, and then we get the bullish move. First we mean revert to the fair value band, and then we keep on going up until then it all flips back around. So this is the mechanical aspect, and Combining this mechanical aspect, on both the Nasdaq and the S&P, I trade the Nasdaq, but I'm also keeping an eye on the S&P. Basically, I was testing this out for the first week, and this is the result I got for the first week. Now, of course, I hope to build on this result from the first week. But going over a bit of trades I went to, I like to trade the New York AM session primarily, but I cannot always do that due to my depending on availability. So on some days I'm actually trading the PM session of Nasdaq. So Tuesday, what I have marked here is taking this long right here, which hit as far as 60 points in TP. Then I took this short as the trend flipped. It was a bit late. It was about, because I'm in Central European time, that's why you see the time like that. It's not the US time. But I took that short here. Here it was a bit late after the first 30 minutes of market open, and I got faked out there. Got stopped out. So again, this was Tuesday. I'm not sure if I traded the PM as well. Let me see. Yeah. And then in the PM session on Tuesday, I took this long right here, right as we were getting the MACD flip, and this hit as far as, it actually kept going higher, but I think I got fully out here at, I decided to get fully out at 30 points here. Or maybe I got out, the remaining out at the flip right here, I'm not sure. Wednesday, yeah, Wednesday, I believe I did not trade. Yeah, Wednesday I did not trade the AM session, so I'll go forward to the PM session. Yeah, so Wednesday then I traded the PM session. The first trade was a loss. I got faked out here. But then I pretty much did well on the second trade, which consisted of this long right here. I could also enter this on the pullback discretionarily, pull back into the bullish fair value gap, which we'll cover in a future video, and then catch the rest of the move higher. Looking on Thursday, I had this short here that I got faked out and lost off of. This one, I believe I took a loss as well, this second trade, but then the market opened. Took this trade with smaller size given the market open, but this trade did well. It hit 30 points TP. I usually, by the way, when I enter a trade, I have 3 take profits. So typically I do the first take profit at 30 points, so 1/3 of the position, 1/3 of the position at 60 points, and then the remaining 1/3 of the position I tend to trade out when the trend flips. The reason for that is because you may get like a runner sometimes of like 200 points, and if that kind of run happens, I want to catch that with at least a part of the remaining initial position. Then I took this short, which ended up playing quite nicely. It hit as far as 60 points in TP here, and for the first 2 take profits, and then it kept going down, and we got this small flip from orange to blue, and I got out the remaining position here. Now, of course, if I had held, I would have done much better. We're talking here about if I had held all the way through here, right, about 110 points, which is crazy. Then I took this long here, hit my first TP, and then I got out at break even the remaining of the position. Thursday, I did not trade the PM session. So that leaves us with Friday. In the AM, I took this long at market open, which went as far as, it kept going higher, but I actually got out at 90 points TP, because I needed to get off of trading. I couldn't stay long, so I just TP'd everything, the remaining position at 90 points. I got that long, and then pretty much I had to leave my desk at that point. But it was a good initial trade. I also opted to trade the PM session on this day, and basically I initially caught this short that did not hit my TP, and I got out at a small loss or break even. Then I took this long, which hit the first TP at 30 points. I then got faked out of this short. This long right here, I got out at break even, but as soon as then this is where the discretionary comes in. So I got out here at break even or a small loss, and then I could see this bullish candle fully engulf the prior bearish candle. So this was a fake out move. I kind of realized that I did not short here. I exited my long here, and then as soon as I saw this bullish candle engulf the prior bearish one, I immediately got back into the trade with a long direction, and that ended up working nicely. It hit as far as 60 points TP, and then I got out the remaining position as soon as the trend flipped from blue to orange. Yeah, so that was basically the first trading week. Again, it was a good week. It was quite a consistently profitable week overall. Of course, I hope to keep this up in the coming weeks, and yeah, we'll see how it goes. But yeah, that was pretty much a breakdown of the strategy I'm looking to apply, all the things I'm looking at when I'm on the charts. These are the results for the first week that I hope I can replicate in the coming weeks. And yeah, we'll be covering more content soon on the channel as we go along. Thank you guys, and we'll talk soon on the next one. Cheers.